Hello and welcome to another acysecurities market update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, as always, I give a little bit of a virus update. We're seeing more than 1.4 million infections globally and the death toll has risen above 80,000. But it's not all terrible news. We have seen that lockdowns have ended in Wuhan after 76 days. Now, this doesn't necessarily mean that there aren't restrictions in place. It just means that the people are allowed to sort of get out of the house a little bit more. They are still doing active virus testing, and there have been people able to return home from Wuhan to where they were living beforehand when they got stuck at the onset of the lockdowns. So it will be interesting to see how the recovery goes, both from a virus side, if there are going to be a second wave of infections, and of course, if we're going to start seeing business activity pick up quite quickly. Now, why is it going to be important for us? Well, most of the world is currently in some phase of lockdown. And I'm interested to see if there is reinfection and if that affects the current standard of what is looking like the timeline for a lockdown. Now, this is the first country or the first province to even come out of a lockdown after 76 days. And it is also the longest time spent in one, as they were the first to enter. So looking at that from a model perspective, does that look like on mean for the rest of the world that we're going to have 76 days or 80 days worth of lockdown before we start seeing some level of recovery? Let's find out a little bit further down the track, because right now none of us can really tell, can we? But it will be interesting to see, especially from that forethought of when we actually will be allowed out of the house, and of course when the economy will start to recover. Now, moving on from that, I've had a little bit of a look at the S&P 500 in the last couple of hours, and I am finding a few little interesting things that I probably didn't actually know before, but I thought I would share it with all of you. Now, the VIX index is still sitting at 40, which indicates that we do have some level of volatility remaining. It has also been of note that on the average day, or the total average days that we've seen recently, there is a 4.8% daily swing going on. Now, that's just an average, it's not an exact, so some days are less, some days are more. But this is important because pre this coronavirus COVID-19 sort of era, the index hadn't jumped 5% since the GFC. So now we've seen it happen quite a few times with circuit breakers being hit left, right and center. And in that time as well, if we look at the past 14 bearish markets that we've had on hand, there have been 20 occasions where the S&P 500 made a gain of 15% or more before tanking. Why is that relevant now? Well, if you actually look at the charts from what we've got on the S&P 500, we can see that we've had basically a 20% rally in the last sort of 48 hours around what's going on in US stock prices and naturally around the rest of the world. So there seems to be a little bit of confidence going there. But this, to me, looks like a simple pattern that has reoccurred 14 to 20 times beforehand. So are we expecting to see that sort of next tumble dump down and tanking through the bottom of what we've seen so far? Perhaps, but my personal opinion is that I am still firmly short on the S&P 500, and I will be looking for short opportunities on the way up on this ride or rise that we are seeing right about now. Moving on to India right now, there has been some reports coming out, and this is not an official report, but there has been some suggestion that the unemployment rate is well above 20% at this point in time since the start of a 1.3 billion people lockdown. Now, that is obviously a huge statistic to sort of get people into a lockdown side of things, but also very big numbers in terms of unemployment rates. Now, India has always had a reasonably high unemployment rate compared to the Western world, sitting somewhere in between that sort of 7 and 8% mark quite routinely. But to see it jump well above 10% and to have been claimed to be seeing sort of figures in the 23% range is astronomical. And what's it going to mean for the rest of the tech world? I mean, a lot of products are manufactured obviously in China, but we do get a lot of technologically related items and engineering items created or made in India. So we might need to keep an eye on what's going on in their country a little bit more and what we might be able to do to help them out if we can. Now, that'll be coming more from a government sort of presence, but from our perspectives, how can we trade that sort of intel? Right now, I don't think it's really actionable because we haven't got a confirmation on it. It is really just a rumor in the wind as far as I'm concerned. But hopefully we will see some more clarity about that in the next coming days. Now, the next pieces of information we're going to move on to is actually China and the economic growth targets for their GDP. Now, the GDP growth target is usually set in March of each year, so about now, but obviously that's been delayed due to COVID-19. So there are really only three outcomes that I can see as being a possibility. The first one is they decide not to set a target, which is what has actually been recommended by some of the advisors to government officials over there, and obviously economic advisement from China. So they're saying that, look, we should probably not have a GDP target for this year because we quite simply can't put one that's going to be accurate and we don't know what to expect. And that's reasonable to a certain degree. The next one is that they maintain the target that they had last year of about 6%, in which case, to me, that suggests that there is going to be an increased amount of stimulus coming into the Chinese economy, and probably very rapidly. Now, is that likely? I don't know. I mean, these are really the only three options that we're going to get, I believe. The next option, and this is really the only other one that's in place other than no and leaving it as it is a decrease in that target. And if they decrease it, I think it would be between around 3 and 4% as the target for their GDP, but it would indicate that the stimulus that they are already providing would continue into at least the end of the year, perhaps sometime into next year. But we won't know for a little bit of time. I am interested to keep an eye on tabs around what's going on there, and if I can get any news across the wire, I will certainly share it with all of you. Now, as it coming up to Easter this weekend, I thought it would be a good idea to let you all know that while some markets will be closing for the Easter break, our support services at acysecurities will still be fully operational, so you will be able to get in contact with us if you have an emergency or if you need to ask a general sort of account in question that might come along the way. But otherwise, after this, I'm going to sign off for now, and I'll likely have another video for you coming up in the next couple of hours, perhaps even some stage early tomorrow morning before the Easter break takes off. Now, if you do have any questions, perhaps it's from one of my webinars, perhaps it's from one of my videos, or perhaps you'd just like to get in contact with me to talk about some of your own ideas for trading and maybe even a video potential for me there, then feel free to send me an email at talktoal@acy.com. And of course, don't forget to like and subscribe this video so you can get more great content from myself and ACY Securities in the future. Have a great trading day ahead.